Okay, so let me share. Now, if some of you joined previous class, we discussed about ESBI as per what the book Rich and Poor Dad share with us. The ESBI, the 4 pillar, a different how you categorize your career, your business. So nothing wrong with it if you choose to be an underemployed or self-employed. Nothing wrong with it. You still can earn a very high profit or high income, but just you have the limitations in time. Okay, always remember at the left hand side, it's more on the individual effort and no, under the employee and self-employed. If you can have more bigger visions or bigger mindset by work together with other people, then you can utilize other people effort and time, and other people work for you, then you can stay at the back, okay, enjoy the income or profit, whatever those people that work for you. Okay, so but you must automate the process, especially at the business time, at the business part. And actually there is one things that I learned in the past. A lot of time if you're under the self-employed or employee, you are more on your individual effort. Means that a lot of time when you face any challenge or difficulty, you will always look for how, H-O-W, how. Why? Because you want to find a way. You learn from how-to, guidelines, doc manual, all these things to find how to fix the problem. But as a business owner or as an investor, you have a different mindset. You look for who, W-H-O. Why? What is the difference between these two? If you look for how, it will take some time for you to learn, to master and fix the problem. It will take longer time. Of course, you don't need to rely on other people. Okay, so that is the difference. And if you are as a business owner or investor, you are looking for who. When you face the challenge or limitations or some area that you're not familiar, if you look for who, then of course you need to pay for it, hire someone who are expert in that particular field or particular area. Then you can get the problem fixed right away, instead of waiting you to master it by yourself by looking at a manual how to. Okay, it will faster the process. As an entrepreneur, you must understand that you cannot master everything. Okay, there are a lot of areas might not familiar to you, but looking for who, you can gather all those people that have the similar passion, similar mindset, or even the visions, what you want to achieve, what you want to accomplish. Then you gather everyone together and work towards the goal. Then you can reach your goal faster. Instead of everything you rely on yourself, you don't want to rely on other people, and you always look for how. It will take longer time. Okay, still remember, we only have 24 times 7 time. Okay, you have the limitation in time constraint. Okay, even you can do everything, but you still have 24 hours. Instead of hire a group of people, help you handle every different thing. Like for me, I'm good in teaching and sharing, but in the account finance, those number, the account template ledger, it might not really something that I'm familiar with. Or sales marketing, admin, all these things, you can hire someone to work for you. Okay, use the money, buy the time from other people, work for you, and you earn from the other people effort. Okay, it's quite similar to investor. Okay, so that will be the first summary. Now the second summary is about this. Okay, still remember that how are we going to this is the one that I mentioned. It's very important to find something, to know your strength. Okay, and also know what you are passionate on. If you can combine your passions with the passion, something that you love to do, and which utilize your strength, and the world willing to pay you, then that is the best of 3 worlds. Combine all these 3 together. Okay, What about if you're not sure about your strength, but you know what the world needs it? Can you develop your strength towards what the world needs it, the professions, the career, or even the business? Yes, but develop a strength will take time. Instead of discover the strength that you already have, that will be faster. In the career or in the business, when you start to work, a lot of time we will more focus on identify your strength. Straight away, you can utilize your strength for something that you want to do. Okay, it will be faster. If you want to develop your strength, it will take time. Yes, possible. Possible. You can build your strength towards the career, towards the business that you want. Okay, then how about I'm doing something that, yes, the world needs it, and it's really utilize my strength. How can I develop my passions, my interest towards to it? Yes, possible. Possible. Sometimes you don't have the choice. Then what about changing? Adjust yourself. Try to love what you do. Okay? So possible. And if you know your strength, you know what you're passionate on, then you need to figure out in what kind of model, in what kind of way that people need it, because the behavior of the world keep on changing, especially after this COVID-19 pandemic. Okay, so that's why it's the best you combine these three together. Since that you're still very young, if you know what you want to achieve, then maybe you can consider develop it. Let's say example, if you want to become a speaker, lecturer, trainer, then maybe you can build your strength in terms of public speaking. Okay, debate, speaking, public speaking, presentation skill, all these things. If you train for more than 300 times, then you gradually master the skill automatically, because practice make perfect. Okay, so that is the things you can develop the strength. Depends what you want. Okay, important, go back to the fundamental, the first class that I mentioned to you. Always figure out, always look forward what you want to achieve, what you want to accomplish in this life. It's very important. Important, keep on asking. If you don't know yet, no problem. You keep on asking until you find a very firm answer from your inner heart. Okay, so far until here, can follow? So that will be the summary revisions for the previous class. If you type in the chat box, then I will proceed to the new class. Got it, Andy? Thank you. Stephanie. Okay. Darius. Carlos. Okay. Now, so in today's class, I'm going to share about risk planning, risk management, but I will focus on personal risk management. Okay, risk management is one of the very important skill that you must own it, because it's very important. Okay, so today we talk about mastering strategy, risk management, essential insurance planning. Now, I want to ask every one of you, why the rich remain rich, the poor remain, why the rich get richer, the poor remain poor? Do you know what is the reason? Anyone want to try? You can type in the chat box, or you want to unmute yourself, you want to voice out. Why the rich get richer and the poor remain poor? Is there any reason that you know? Why? I want to relate to risk management. Investing, because rich keep on investing, okay, but the poor keep on preserving the money that they have. No right or wrong, but the poor actually is not really, they are not even invest in anything. Okay, they spend most of their money for daily spending, expenses, daily expenses item. Okay, this is because they okay, wait, Daryl say this is because they have more experience, knowledge, keep being rich. Yes, the knowledge, skill, and sometimes they also hire smart people to work for them. They're willing to pay. The rich people willing to pay, hire the smart clever, experienced people to work for them. They're willing to pay. Okay, they use money to buy hours from other people. Still remember, we have 24 times 7 hours. Everyone is equal. 24 hours a day. Everyone is equal. If you don't have enough time, can you buy time from other people? Of course, you hire someone is equal to you have another 24 hours. If you hire someone to work for you. Okay. Yeah, Declan say mindset. Of course, mindset is the whatever that you encounter in your life, you face anyone, you meet anyone, it's a projection from your mindset. It's the rich mindset. Okay, rich people continue learning. Yes, like you, every one of you, you are learning. The best investment is invest in yourself. Improve your earning power. If you invest in your mindset, then you will project into your life. Okay, you are getting better and better. You cannot downgrade. For learning, is continue upgrade. Once you go upgrade yourself, you cannot downgrade one. Okay, that is the beauty about learning. Okay, you continue top up. Okay, the rich know how to make money, but the poor didn't know much to do. Yeah, Christina, yes. Actually, the poor, they not even believe that they will become a rich guy. They not believe. They don't believe they will become rich someday. They will always tell you that rich is for those people, other people, not me, not me. They don't believe they can become rich in one day. They don't believe. And today we talk about risk management, isn't it? So when we talk about risk management, I can tell you one thing. The rich people, they know how to do risk planning. They really put some effort to do risk planning. For poor people, they not even do any planning about it. Whenever they encounter any risk, any challenge, any disaster, any market fluctuations, they didn't do any risk planning about it. Let's say when they're facing any disaster, natural disaster, they just accept it. Everything go back to zero and they restart it again. Instead of, for the rich people, they will diversify. They will do a planning how to reduce the risk, how to reduce the negative impact for whatever market movement, disaster, war, conflict. They always have extra planning. That is called risk management. How to reduce the risk. If the market fluctuations, they were looking forward how to diversify the investment. When facing a different industry, they will diversify into different industry. Let's say during the COVID pandemic, travel industry being hit badly. So they will know that, okay, that is the cycle. So they will plan. So maybe I will have a different, invest in a different industry. So that in certain period of time, certain industry make profit, certain industry might not do well. So that is the risk planning, diversify in terms of investment. For poor people, they didn't do any planning. They keep on work hard every day, work hard, work hard. They're not even thinking how to preserve their wealth. What if, and what if? Let's say there is a disaster, there is a flood, there is a cyclone, whatever come to them, they didn't do any planning of it. That's why their wealth becomes zero and reset it again. Next year come again. They didn't do any risk planning to counter a different uncertainty. That is called risk. Okay? So repeat again and again. But the rich always do a proper planning. They always think ahead. What if something come to me? What if I planting something, let's say crops, plant the oil palm, okay? Then what if no output? They will do extra, they will do some planning. What if? They will do a lot of what if, ask themselves, no matter in their life, in their career, in their business, they always ask what if. What if the plan is not work? They will prepare another plan, second plan, plan B, plan C. That is risk management. Okay, so that is very important. Now, good. So in the financial stability pyramid, the fundamental always go back to emergency fund. Emergency fund is very important. Okay, that is the first step in financial planning. And of course, if you have credit card, then that is also another form of emergency fund. But you must use it carefully. Okay, it's like a knife. You can use the knife to cook, to cut the vegetable. You can use the knife to kill a person. So it depends how you use it. Okay, so emergency fund, you must have at least 6 to 9 months of your total expenses and income. Because if you lose your job, then you can go for another few months to look for another job. In between, you have this emergency fund to support your expenses, support your daily expenses. Okay, so the fundamental always the emergency fund. Okay, 6 to 9 months. Do you know, because of the pandemic, some of the people respond to me, feedback to me that they better to put 1 year or 2 years. I say fair, but from financial planning perspective, 6 months to 9 months considered quite okay already. Okay, but this money you must put in a very liquid investment, means that very easy for you to convert into the cash. Once you set out the first level, then you come to the second level, which is our focus today, risk and protection. We encounter different risks around the world every day. Even you at home, or maybe you at office, maybe now you are in your school, or maybe you in the Starbucks, you are facing a different kind of risk from your personal, from your asset, even from your liability. So from the personal perspective, it's like something that the risk that you're facing, like death, total permanent disability, we call it TPD, illnesses, accident, medical, health problem, you lose your asset, damage, any reputation damage to other people. Okay, all these are the risks that you are facing. Okay, now once you set out second level of protections, then the third will be investment. At least 10%, at least. Okay, 10% and above. So a lot of people, they jump queue. They didn't follow the step 1, then they straight away jump to invest. Anything happen, some emergency expenses, or maybe due to healthcare, they being hospitalization, some health issue, some accident happen, then they need to fork out the money from the investment. Maybe still not making any profit. Then that is not the right thing to do. You must set out the first level emergency fund to ready for any emergency expenses. Okay, then of course the second level is whatever risk that you facing, you can transfer to the insurance company. Transfer, risk transfer. Okay, to the insurance company. If you are being hospitalized, if you met the accident, you can claim from insurance company. So that is called risk transfer. Okay, once you have the second level, you go to the third level, called save and invest, at least 10% and above. So until here, clear? So far can follow? Anyone have any question? Any question you want to ask? Okay, thanks, Christina. How about others? Others can follow? Okay, Lei say, okay, good, it's very clear. Okay, material. Okay, no thanks. Okay, cool. Then let me continue. Now, what are the risks that you're facing now? No matter you stay at home, in the office, maybe in the car, in a Starbucks, or maybe anywhere that you are in. Okay, what kind of risk that you're facing? Risk actually is uncertainty. Okay, it's the uncertainty that you're facing. What kind of risk that you're facing now? Can I say fire first? First one, Christina, you say first one means what? What kind of risk that you're facing? Fire? Maybe the house on fire, you fall down, you mistakenly cut your hand when you're cooking. Let's say like you're cooking, you fall down, fall from the staircase. Okay, these are all the risks that we are having. Okay, or maybe the house collapse. Okay, a lot of risk every day. Or maybe you feel you are not feeling well. Okay, yeah, all these are the risks that we are facing. Okay, or maybe fall down or whatever. There are a lot of risks that we are facing. Okay, all of these actually we can transfer to insurance company because you need to incur extra expenses to that. If you don't transfer to the insurance company, you will use your money to cater, or maybe you will use your emergency fund to cater that. Emergency fund might not enough, but insurance will provide a big pool of money for you to ready for your claim. That is the insurance planning. Okay. Now I share a story. Before last time there is one of my friend told me that when I want to buy a house, I will always looking near to two locations. When I to buy a house, I want to make sure that my house near to these two locations. Number one is hospital. Second is airport. Anything emergency, go to the hospital first. So my house must near to the hospital. Something that emergency, rush to the hospital. Or if there is a disaster or any conflict, go to the airport, run away. So that is also one kind of risk planning. Get the idea? Okay, get the idea? If the house is on fire, where is your fire extinction? Okay, so how are you going to run away? Where is the door? Each floor should have one door to run away. You must simulate in your mind what you should do. What if? What if? Okay, so you must have in mind. That is called risk planning. Now, this is the good case study. This is another good case study that MH370, the missing flight, until today we still cannot locate. Where are these people go? Okay, we still cannot locate this missing flight. And one of the thing is, one of the thing that we can learn from this MH370 is there are 20 of free skill staff in this same flight. And these are very experienced people in the company. Very important and have a very strong technical background in the company. One night, this company lost a total 20 important VIP staff in the company. Now, looking at this incident, what you from this incident, what you learn in terms of risk planning, what you learn from this incident? Should we put them in the same flight, or they should go to meeting or conference in two different flights? Instead of all the staff, the whole company staff travel with the same flight. You get some idea from here, the risk planning. This is the company level of risk planning. If you plan for company vacations, plan for company travel plan, you should not put everyone in the same flight. If it's the same flight, what if crash? The whole company gone. All the important, yes, two or more, yes, put them into a separate, because 20 very important person of the company travel in the same flight, the risk is very high. You are not diversified, the risk, you know. Then if the flight collapse, crash, the whole, let's say all the top management of the company gone, then how? The company cannot function, cannot sign, cannot have meeting, don't know, they need to rehire someone in. So they should have a different flight. So this is one of the good example. It's like the one that I mentioned to you. When I buy the house, I want my house near to hospital or near to the airport. Anything emergency, run away. Rush to the hospital or run away. So that is also another strategy of risk planning. Okay. Now, when you invest, let's say you invest in stock. When the market crash, your stock will affected. Then, did you diversify your investment? Let's say market is not good. You cannot cash out your money from the stock market because it crashed. It dropped maybe 50%, 40%. Then you should diversify, let's say, into property. Maybe the stock is not making the money, but the property still give you a rental. Maybe lesser, but you diversify into different investment assets instead of putting all in the one basket. If you're putting all your egg in the same basket, you fall. The whole egg gone. You cannot eat egg anymore. So don't put all egg in the same basket. That is also one of the way diversify. Okay. In the risk planning, we talk about using insurance. Actually, insurance is another risk management of risk transfer or risk sharing. Risk transfer means you are transferring the risk that you are facing to the insurance company. Then if you incur some expenses, you can claim from insurance so that you won't burden your personal finance, your account. That is the concept of risk transfer. If you didn't buy the insurance, it means you are using your own money to face your risk. If you didn't buy insurance, then you need to fork out your pocket money. And you were in trouble in a few months or in a half year, 1 year. You will have some tight cash flow because you are using your own money. That is called risk retention. Retain it with your own money. No leveraging effect. Then in the Islamic finance, we talk about risk sharing. Also, there is some contract that risk sharing. Anything happen, we bear 50-50. You bear 50% loss, I bear 50% loss. Okay, that is called risk sharing. Then there are also two strategies that we can use. Avoidance. Try to avoid the risk. You know this is a very dangerous act, dangerous action, dangerous activity. Then you can say, I totally avoid it. I don't want to join. I don't want to join. I don't want to participate. Those dangerous sport activity or those dangerous country, avoid travel to dangerous zone, dangerous country, dangerous city. Okay, so that is called avoidance. Okay, or don't drink alcohol when you drive. Avoid so that you stay alert. Okay, now another one is called loss preventions or reductions. Okay, you cannot avoid it. You have to face it. Then you reduce the level. Reduce the intensive level. Okay, example, you worry about health problem. Then every year you do medical checkup. If you discover something, you take precaution step, or you cure it at the beginning of the phase. So you reduce the risk. Okay, or you install a fire extinguisher. If there is a fire, you have the tool to put down the fire. Or you have the fire escape stair for each level. So if there is a fire, earthquake, where to run, which door to use. Okay, or you wear your helmet if you use the motorbike. Okay, you wear your helmet to protect your head. So that will reduce the risk. When there is an accident, you reduce the casualty, you reduce the level of injury. That is called risk reduction. Or you install the alarm CCTV. So that is called risk reduction. Okay. When we talk about the risk, there is a severity level, high and low. And also there is a frequency, seldom or often. Okay. If it's often happen, then the risk is higher. But the severity is low, then you back it with your own money. You back it with yourself, called self-retention. But the severity is very high, not so often happen like the health problem, work accident, death, cancer, illnesses. Then you can transfer to the insurance company. If too frequent, the premium is very expensive. Okay? And if the severity is low, and no matter seldom or often, sometimes you can bear it with yourself. Let's say you lost your wallet, maybe you lost your handphone, then it's okay lah. You won't buy insurance on it. You bear it with your own money. You buy another one. Or maybe you ask your parents to buy another one for you because it's not so expensive. Your wallet, your eraser, your stationery, your bag, all these are severity is very low. Okay, not always forget, or maybe you lose your wallet or whatever. So depends how severity, how often, how frequency it is. Okay, so in concept, actually it's like this. We face a different kind of risk: death, sickness, disability, liability, accident, health issue, fire, flood. Okay, actually it's flood, not flood. Okay, flood, the disaster, the natural disaster. Now, each of us is having an insurance coverage. Each of us, you or me, is the same. Each of us is having an insurance company. The difference is either you retain it with your own money called self-retention, or you transfer to the insurance company. That is the big difference. Everyone is having insurance cover. Whether you retain it with your own money called self-retention, or you transfer to the insurance company. That is the big difference. And you must remember another concept. Insurance is a business. You need to buy when you don't need it. Or you need to buy it when you're still healthy. You need to buy it when you accept your asset that you own still in a good shape. But you will not get it when you need it. That is something very funny. Insurance, you won't get it when you need it. When you're not healthy anymore, insurance will not cover you. Okay? When your asset has some defect, insurance will not cover anymore. It will exclude whatever defect that you have. Even in your body, if you have any organ problem, the insurance company will exclude that particular organ. So you must buy it when you're healthy. When you need it, you won't get it. That is something funny about insurance. Okay? Get it until now? So far, can you respond to me? So far until now, can follow? Do you have insurance coverage? Any one of you, do you know that you have insurance coverage? If yes, you type in the chat box. If no means I don't know, I'm not sure, I need to ask. Do you know that you have insurance coverage? Yes or no? Yes means you know you have. Your parents told you before. Or no, you type no means I'm not sure, I need to ask. I need to confirm. Okay, yeah, some of you know, right? Yeah, you all type in the chat box. Correct. Thanks. So, yeah, in the insurance part, when we talk about the personal, we will always focus on three categories. From the personal perspective, let's say death, total permanent disability, critical illnesses or deadly illnesses, accident or medical. That is from the personal perspective. Then property. What kind of property that you own? Your house, your car, your shop lot, your condo, All these are the property that you own. Okay, no matter damage or loss, you can transfer to the insurance company. Now, the third one is called liability. Liability means the negligence that you cause injury, cause damage, cause death to other people or other asset. That is called liability. Or any accident, or any reputation destroyed, or damage to other people. You share something, you talk bad on other people in the Facebook, people sue you. That is the reputation damage, your liability. Okay, you fall down. Okay, you mistakenly cause injured to other people. You use other people's asset, you cause damage, and you have the liability to replace a new one. That is called liability. Okay, so today I may focus on the personal perspective. And don't look down on insurance. Insurance is very powerful tools that we should utilize because we can transfer the risk so that we can focus, no matter from the personal and company also the same. Insurance is the best tool. You transfer the risk out so that you can focus something that more important. Let's say today, you get your risk covered so that you can focus on investment. Extra money go for investment. If from the business perspective, extra money you put in where? Expand the business, hire more people, put more in R&D. If not, if you didn't buy insurance, then you must ready your money there, untouched, ready for any disaster, any risk, any challenge, any uncertainty. So if you buy the insurance, since that you already get covered, get protection, then the extra money that you have, actively invest, actively expand, actively put in R&D, research and development. So insurance is the faster tools to create your asset and estate. Let's say you pay a money premium of few hundred, then you get the coverage of 1 million. This 1 million is your estate or your asset. So insurance is the best tool and faster tools to create your asset or estate. Okay, so insurance is the very good tools. You should utilize it. Okay, now if you invest in property, we talk about power or leverage. Okay, if you invest in property, you fork out 10% as a down payment. Different country different. Maybe some you no need to put up, you no need to take out down payment. You can borrow 100% from the bank. Then will be like you can 100% get the leverage from the bank. But if you fork out 10% down payment and you get 90% from the house loan from the bank, then it's about 1/9. 1 is from your own money, 9 is you borrow from the bank. You are leverage the bank money for your property. Now, if it's an insurance actually is the you pay a money premium of few hundred, but you get 100,000, 1 million of coverage in terms of protection. Then actually that is 1/100, 1/1000 kind of leverage. So millionaire like to utilize property or insurance because it offers you the power of leverage. If you invest in stock, you use your own money to invest in stock, then will be 1/1. But if you use the share margin, 1/2, you fork out your own 100,000, the bank lend you another 200,000. So you can invest total 300,000 in the stock. That is called stock margin, share margin, 1/2 or 1/3. Okay, so you must utilize the leverage tool to create your wealth. Okay, these are the two best tools that millionaire are using. Okay, now looking at all these, the world top cause of the global debt in 2023, all are disease related illnesses, and also this all are disease related. Okay, even including the virus. Okay, so that's why it's very important to transfer out the risk. These are all the global debt in 2023. Top 10 causes. Okay, in Malaysia, one of the top 10 causes are accident. Okay, so this is the global statistic I checked from the internet. Now, what is your life value? How much you worth? Can you share with me how much you worth today? Can you tell me your number? Because I'm sharing about human life value. Human life value. How much you worth today? Can you share in the chat box in the number? How much you worth today? 23.15. Matthew? Andi 0? I don't think so. Okay. To your parents, you worth more than that. Okay. Some people say infinity or infinity. Okay. Okay. Actually, when we discuss of how much you worth today, if you are start to work, then we will use we will calculate how much you earn. How much you earn. Okay, until you retire. The total money that you earn from today until you retire, that is how much you worth. Okay, it will increase over the year based on your experience, but based on how many years that you work. Okay, that is called human life value. When you buy insurance, you need to cover your human life value. Actually, human value, you cannot set the value on it. No matter what value you tell me, I will accept it. Why? Because everyone different. You will never know one day you become millionaire. Then your human value is more than maybe 1 billion or trillion. You will never know. One day you become the world leader, the president, or the CEO of the company, of the super company, giant company, then your value is more than that. So in buying the life insurance, the sums assured, the coverage always at least minimum 10 years of total income. 10 years of total income. If you have children, okay, I have 3 children, so I need to factor in, this is the human life value is something that if you're not around, you want to continue provide the coverage, provide the income for your family, at least 10 years. So if you got children, then you quantify your youngest children until he or she graduate from university. Let's say my youngest children is at the age of 8 years old. So from 8 to 23, graduate from university, 8 to 23 means 15 years. So I need to continue provide my income to the family 15 years of total income so that they won't need to compromise. Their lifestyle still remain until my youngest daughter graduate from university. Then they can sustain them, they can survive. Because after they graduate, they can go out to work. So that is called human life value. Human life value, you can say yourself infinity, unlimited, because you'll never know. Okay, any number is okay. You can say you are million, billion, because you want to become billionaire, trillionaire, whatever, possible. Okay, let me, okay. And in the life insurance, you can use it to cancel your debt cancellation, so that you will not leave the debt to your family members. Okay, so in the critical illnesses, you also can another term called deadly illnesses. Okay, the global average lifespan is 73.4 years. The global average healthy lifespan is 63.7. Means that after 63.7 years, they will encounter a certain illnesses until the age of 73.4. Then the global average retirement age is 60 to 70. Depends, each country different. Some even don't have official retirement age, means you can work until you die. If you stop working, where is the income for you? Okay, that is very important. Now, in Malaysia, I give you a statistic. If you have the difficult to maintain your lifestyle, you need someone to take care of you. Average 1,000 per month to 5,000 per month. Especially the dependents living, ICU. Those you need someone to take an intensive care on you, handling from morning until night, 24 hours. That will be very expensive. Very expensive. Okay? This is the Malaysia statistic, and this is the US statistic. Okay? It can range from the independent living from few thousand dollars to $10,000 annually. This is the independent living. Means that he just need a little bit care, little care. But if you need a intensive care, then it will be 1 year, 100,000, roughly. The semi-private nursing home care, that will be 100,000. And the assisted living is 1 year around 54,000 annually. So that is extra cost that you need to face. Okay? And the coverage for critical illnesses, normally we will put total 3 years of total income. Why? Because if you have cancer, stroke, or any deadly illnesses, you will use the medical card hospitalizations facility to be hospitalized to receive the treatment. Once you complete the treatment, you will need to rest at home for 1 to 3 years until you fully recover. And within this 1 to 3 years, you need income to rest at home. So the critical illnesses insurance payout is to allow you to stay at home, to rest, to fully recover, then go back to work. Okay? Now, if you are some people, when they have illnesses, they're being hospitalized for treatment, then you can buy the insurance in terms of medical or health insurance to cover your expenses when you're being hospitalized. So you must look at a few indicators like room and board, and you must the minimum amount room and board per day that you're going to spend in your room. The lower means more people in the same room. The higher means more privacy, maybe 2 or 3 or 4 in the room. Okay, room and board. And the coverage for annual limit, if you can, few 100,000 and above. For lifetime limit, if can, you go for at least 1 million or unlimited. Their insurance offer you no limit. Then you can claim as much as you can if needed. Instead, if you have the limitation here, means that it will limit you. You have to compromise. Okay? Then accident is very important. Okay? You will never know. Dog bite, car accident, fall down, you cut your finger when you do some exercise, or you fall down, injury. Okay, all these can be claimed under personal accident. Okay, so now can follow until now? Everything clear? Can follow? Maybe today you are first time having this kind of background, but no, don't worry. Insurance is very important too. You must have the basic on it at least. About risk transfer. Okay, having a risk planning is very important, so that when you face the risk that you're facing, the challenge that you face, you already do some preparation on it, so that you will not like the poor. Everything go back to zero, reset it again. Okay, if let's say you are high income, you accumulate a lot of money, but when there is a health problem or accident happen, you didn't buy insurance, then all your money will be used to pay all these claim expenses, and everything go back to zero, and you need to reset it again. You need to re-earn it back again. Or you invest everything, put in the same investment. You didn't diversify. Then when market crash, or you put in the same company, the company bankrupt, then everything you go back zero. You didn't diversify it. Okay. Now, I give you one exercise which is very useful. If you're not aware of the insurance that you have, I already said here, these are the 4 important insurance category. Number one is the life coverage, at least 10 years of total income or expenses. I know that you're still very young, you are you are still student, so you might not have the income. It's okay. It's okay. So at least I give you the industry benchmark, at least 10 years. If you have family in the future, then you must make sure that you must count how many years for your youngest children graduate from university. Then that will be the total years of income you want to continue support your family. That is your life coverage. Okay. Then the critical illnesses or deadly illnesses will be 3 years of total income. Then the hospitalizations, room board, annual limit, lifetime limit, and the personal accident are 5 years total income expense. That is the suggestion. So you can find out your own coverage. If you're not sure, you can ask your parents or your insurance agent. Okay, then at least you have some idea. And even you not so understand, it's okay. Okay, use it as a first time to explore it. That is the best tool you should utilize. Millionaire utilize insurance because insurance offer you the best leverage tool, the best risk transfer tool, so that you are peace of mind. You don't need to worry any risk that you are facing because you already transfer the risk to the insurance company. Then the extra money, you will actively go and invest. Invest in your learning, invest in your, to grow your wealth, to become financial freedom. Okay? Can follow until now? If okay, can you type okay? Okay, okay, thank you. If this is the case, then I will pass to Queenie, okay, to handle the quiz portion. I already covered all. Luckily today I can cover all. Thank you.
Okay, thank you so much, Mr. Young. So now I'm just going to share my screen so that we can start. So for today we have, okay, so for today we have another Kahoot for our quiz. So if it's okay, if everyone can just join this game pin. So if you go to kahoot.it on Google or Safari or whichever browser you use, and then you enter this game pin, then you can join this game where we'll go over a few questions from today. I'm just going to give everyone like 2 to 3 minutes to join, and I'll just wait for a few more players. Okay. Okay, I'll just give 1 more minute for those who still have not joined. Okay. I think we'll get started now, and then for those who weren't able to join, you can just follow along and just like try to pick the best answer just from like your own place. Okay, so let's get started. Okay, so the first question is, what is the recommended minimum percentage of income to save for investment according to the financial stability pyramid? So maybe remember back to when Mr. Young was talking about this pyramid, and then he was talking about the exact percentage to save. I feel like this question maybe it will be a bit hard to remember because oh, okay. So it seems that not everyone answered. So a lot of people chose 5%, but actually no one chose the correct answer. But basically the correct answer for this one, oh,
Um, excuse me. We can't see the screen. The screen is frozen.
oh, okay, wait, let me just try to reshare then. Uh, can you guys see it now?
Yes, can.
Yes, we can see it now. Thank you.
Okay. Sorry about that. So that's why not everyone answered it. Okay, but basically the first question was just saying, what is the recommended minimum percentage to save for investment according to the financial stability pyramid? So for this question, it was near the beginning of the workshop where Mr. Young had like the pyramid looking thing, and then he was talking about the exact percentage. So for that one, that would have been 10%. Okay, so sorry about that, guys. Let's move on to the second question. So this one is, what is the suggested duration for an emergency fund to cover expenses or income? Okay, yeah, so many of you guys chose the correct one. So for these two questions, it's kind of like a specific number, so it's kind of hard to remember. But this is once again at the beginning with the financial stability pyramid. So for the emergency fund, that would be 6 to 9 months. Okay, so Andy's first right now. Let's move on to the next question. So what is the leverage ratio mentioned for insurance in comparison to property and share margin financing? Okay, so for that one, I don't think many of you guys chose the correct one. So for here, it was 1 to 1,000, and I think the other option that wasn't here was also 1 to 100. So So this is asking for the insurance in comparison to property and share margin financing. So for this one, I think again, it's like a specific ratio to remember. So it's a bit difficult to know the exact one, but it's okay. So if for those who might not have missed it or something like that, then maybe go look back to the recording after today's class to look back on like the specific reason why it's 1 to 1,000. Okay. Okay, so Lucas got that one correct. So let's move on. So what is the key reason that differentiates the rich from the poor? So I think kind of look at the image for a little hint on that answer. Yeah, okay, so most of you guys got the correct one. So strategic risk management is basically the whole idea of today's workshop. So the rich really like manages, oh, oops, okay, so so at the beginning, Mr. Young was talking about like the reason that there's the difference between the rich and the poor, and the main reason is that the rich really plans for risk in the future, and then also like while the poor just kind of like preserves and like does what's happening in the moment and doesn't really think about the future. So I think like green would have also worked like planning for the future a little bit, but I think the specific answer was strategic risk management. Okay, so Andy's first again. So according to the document, how much life insurance coverage is recommended relative to total income? So once again, this is like a specific number. Okay, yeah. Most of you guys got this one correct. So the year, like the range is only like 5 from each other, so not that big of a difference. But yeah, the specific no number would be 10 years. Okay. So which insurance type covers more than 3 years of total income for resting at home in case of critical illness? So this one is just the specific name of the insurance type. Yeah, okay. So for this one, in the question, I think it says specifically for critical illness. And for that one, it would be 3 years. And from these answer choices, we can see that really the only one that has the word critical illness is blue. So that would be the correct answer. Okay. So what is a key concept of risk planning? So here it's like a specific quote that we talked about in today's workshop. Okay, yeah. So for this one, it's don't put all your eggs in the same basket. So for this concept, it's like talking about diversifying your choices. So if we think back on that case study we had about their airplane, that how they lost like 20 of very, very important members of the company. So don't put like all your important features in like one single place. You have to like diversify just in case something happened in the future and like you had no control over it, right? Okay. I think some people in the chat are saying that the screen is frozen. Like, is it okay right now, or do I have to reshare my screen? Because I'm not sure if it's just for a few people because of their Wi-Fi, or is it because on my side if it doesn't work? Is it,
So far, okay. Really
is
okay so far. Can.
it's okay? Okay.
Okay.
Okay, I'll move on to the next question. So what is the value of human life? So this question is kind of like we talked about it briefly, and I think it's yeah. Okay, yeah, for this one, it's all the answers because like we kind of said it was infinity and we kind of said it's like we don't know really, but then again it depends on each person. And so that's why it's all the answer choices. So it can be any of the four or like any number to be honest. Okay, Andy's still first, and then we have Dylan and Will I am. So this is the last question, and it's double points. So what is important to realize about insurance coverage? So we also talked about this briefly. And be careful with the answer choices because they're quite similar. Okay, yeah. So it was blue actually. So we talked about like you want to buy it when you don't need it because like that's when you're healthy. But then when you want to get it, you by the time you need it, you won't be able to get it because once you're older, like you'll have like different health problems and then that won't be covered in your insurance. So then yeah, so that's why it's blue and not green because for green it says you'll get it by the time you need it, but then most of the time you won't. So yeah. So let's look at the podium. So at third, we have Dylan, congratulations. And then second is will.i.am. And first, we have Andi. So congratulations to these three and also to the runner-ups for answering most of the questions correct. So for the prizes, is it okay if the three winners, wait, let me think. Andi, will.i.am, and Dylan, if they can just open up their cameras just to like identify yourselves, just to make sure. And then also if you could please insert your email into the chat box so that the prizes can be sent to your email, that'd be great. So Andi, will.i.am, and Dylan. Hello. Okay, so can the three of you please put your emails in the chat box? Okay. So Andi, and then we have I think it's Dylan, right? Yeah. Okay, let me just... Okay, I got the... Okay, thank you so much for everyone for playing in this little game. And also, I hope many of you guys learned a lot from this. And I think, do you have anything else to say, Mr. Yong, about today?
Congratulations for those who win the prize, the quiz.
Yeah.
Well done.
Okay. And would we like to take a class photo for today?
Yeah.
Okay, so for anyone who wants, we're gonna take a photo just to end off today. So if you want to open up your camera, or for anyone who's comfortable with opening up their camera, we're just going to take a group photo. Hi, everyone. I don't think many people want to open up their camera.
Right.
It's okay. Okay, hi, Stephanie. Hello.
Feel.
Okay, so I don't think anyone else is gonna open up their camera. Okay, so I'll just say like 1, 2, 3, and then you guys can get ready to smile. Okay. 1, 2, 3. Okay, thank you guys so much for the photo. And once again, thank you everyone for joining us today. I hope that everyone had a great time. And then, yeah, we'll be having our future workshops probably in the next following weeks. So please stay tuned for that on our website and also on the WeChat group chat for those who are in that group. And yeah, so thank you so much everyone for joining. See you guys next time. Bye.
Bye. See you.
Mm, mm. Oh, okay. So I guess they're not leaving, but let me just... Okay. Okay.
Mm,
Hello.
okay.
Thank you for today.
No problem. Yeah, the one that you want to discuss is the last the last two session, right?
Uh,
The one that you want to do.